Once again, our committee is beginning an inquiry into fraudulent accounting practices at a major United States corporation. This time, the company being investigated is WorldCom. Auditors, audit committees, and boards of directors have not been able to provide the protections to which shareholders are entitled.
What is even more troubling to me, however, is that a corporation may comply with all the current disclosure requirements, be examined by a competent audit firm, reviewed by all the market analysts, and be found to be compliant with all the rules, while at the same time have material underlying financial deterioration that is not observable with the current disclosure requirements.
In essence, WorldCom has revealed they inflated their books by $3.9 billion. They treated ongoing operating costs as capital investments.
Hello everyone, I am Amanda and we are from Group 5. And today's case takes us into one of the largest accounting fraud scandals in history, which is the WorldCom company. For more explanation about the case, my friend will explain it to you. Thank you.
So one of the most popular world telecommunication company in American is WorldCom Inc. WorldCom Inc. was founded in 1983 by Bernard Ebbers. WorldCom Inc. was one of the largest long-distance phone companies in the world, providing services like data transmission, internet access, and long-distance calling. However, this company involved in one of the largest corporate fraud scandals in the US history. The fraud was uncovered in 2002, revealing that WorldCom had inflated its asset by approximately $11 billion. This led to a massive collapse of the company, resulting in its bankruptcy filing. The scandal caused severe damage to shareholders, employees, and the broader telecommunications sector. Thank you.
Is WorldCom a financially sound, solid, surviving company?
Absolutely. We are free cash flow positive. We announced that today.
Hello everyone, my name is Amanda and now I will talk about what kind of fraud did WorldCom do. The WorldCom scandals was one of the biggest accounting scandals in the history and also contributed to sweeping auditing and financial regulation. The primary form of the fraud was accounting manipulation through the financial reporting. A lack of controls within the financial system at the time also played a major contributory role in the fraud. As the CEC reported, the improper accounting entries were easily accomplished because it was apparently considered acceptable for the general accounting group to make entries of hundreds of millions of dollars with little or no documentation. WorldCom also inflated its revenue figures by booking a fake transaction. This was done through the round-trip transaction with other companies, where one company would sell services to another and then repurchase the same services, all while recognizing the sales as legitimate revenue. Thank you.
The real pressure that the accounting department was put under was producing an entry that was based on the CFO's thought process of what he thought the number should be, as opposed to what we knew the underlying answer was.
Good day everyone, so today we look at the fallout from one of the biggest corporate frauds in history. So the WorldCom in 2002, the telecommunication giant was exposed for inflating its profits by 11 billion US dollars. The consequences were severe, which is WorldCom filed for the largest bankruptcy in the USA history at the time. Shareholders also lost over 180 billion US dollars and thousands of employees lost their jobs. So the company also faced a $2.25 billion for a SEC fine and agreed to pay $750 million in restitution to investors. The scandal reshaped corporate regulations and left a permanent mark on the telecommunication industry. This shows how important honesty and clear rules are in accounting. And after the scandal, new laws like the Sarbanes-Oxley Act were created to stop this from happening. Again, WorldCom reminds us that accountants and leaders must always be truthful because they work impacts millions of lives. Thank you. That's it for me.
Out there that's holding WorldCom that just got the news that the SEC has conducted an informal inquiry.
It's a very difficult thing to know what to say because I don't have enough definition to what they're asking. It was not anticipated. It's a very time-consuming prospect because they ask a lot of information.
Hello everyone, my name is Sandy. I will explain where the fraud happened. The WorldCom accounting fraud took place at the company headquartered in Mississippi as well as in financial accounting department. Across multiple locations, eventually WorldCom was forced to admit that it had overstated its asset by over 11 billion. At the time, it was the largest accounting fraud in American history. About a year later, the company went bankrupt. The WorldCom case was tried in the Southern District of New York, and the company founder Bernard Ebers was convicted in 2005 on charge of securities fraud conspiracy and filing false documents. The trial took place in Manhattan, New York. Ebers was sentenced to 25 years in prison for his role in the fraud.
We have forecasted annual revenues of $30 billion, 22 million customers around the globe. We are more than 75,000 employees strong. MCI WorldCom's top priority is to deliver maximum return to our shareholders.
Are not issues that our shareholders ought to be concerned with respect to the investigation by the SEC. I would be the first to tell them if I thought there were some issues.
WorldCom announces that it's going to revise its financial statements for 2001 and the first quarter of 2002. It confessed that WorldCom
scandal unfolded in the year of 2002. Internal audits revealed many irregularities in WorldCom financial statement. The company board of directors started the investigation, which confirmed the fraud. On June 25, 2002, WorldCom publicly announced that it had overstated its earnings by $3.8 billion. This revelation sent shockwave through financial markets and raised questions on the integrity of corporate accounting practices. Later on, in July 21, 2002, WorldCom filed for bankruptcy, claiming over debts of $30 billion. This made it the largest bankruptcy in US history at that time, even surpassing Enron's earlier bankruptcy in December 2001. In conclusion, the WorldCom fraud shows how dishonest accounting can hurt investors, employees, and the economy. It teaches the importance of honest financial reporting and strong company checks to prevent fraud. This case led to new rules like the Sarbanes-Oxley Act to stop such fraud in the future. Overall, it's a reminder that businesses must act ethically and be responsible. Thank you.
Leaders in the business community are honest and upright people.
This time, the company being investigated is WorldCom.
They conducted a confidence scheme unlike any ever seen before.
It appears now that senior WorldCom executives deliberately hid almost $4 billion in expenses.
This cowboy capitalism must stop.
The announcement of this fraud turned WorldCom from a world beater into a penny stock.
The auditing firm's responsibility is to perform their audit in accordance with generally.
But what do you guys do? Just check the arithmetic? And give them gold star if they had it right? I mean, this is a very minimalist function that you are describing.
Do you ever wonder why do we choose WorldCom fraud scandals as our topic? It's simply because we are interested in the company's information, and also WorldCom is one of the largest corporate fraud in US history and offers key lessons in business ethics, internal controls, system management, and ethic leadership. This is all from us. We hope you can get some valuable lesson and information. Stay tuned for more updates on business and finance. I'm Sandy, and thank you for watching.